Hello, everybody. Welcome to Tuesday. The S&P 500 was up a little bit more than 0.7% today, making back almost all of the money that was lost yesterday with the tariff issues. Of course, yesterday the market was down like 2% at one point. Then we heard that the Mexico situation had been resolved at least for 30 days. Market jumped back up. After the market closed yesterday, we heard that the Canadian situation was resolved also for 30 days. And then overnight, we actually had additional tariffs that China was placing on goods as a retaliation to the goods, that were being tariffed by the U.S. And again, they were supposedly going to have a conversation. So we'll see where that goes as far as that goes. So far, what we're seeing with the tariffs, at least in the short term here, is a negotiating tactic to try to get things, to the table that we might want, which is going to have limited impact on the market overall. Obviously, create some volatility like we've seen in the last couple of days, but not, permanent issues and tariffs that are creating inflation and those types of things. So, at the moment, we have to assume, that they're aware kind of how these things will play out. Tariffs are tough just because, again, if you increase the cost for at 25%. So say it was Walmart and they're importing something, and it's got a 25% higher cost. They either got to eat that cost and lower their revenues, their earnings after revenues minus costs, or pass some of that or all of that along to the consumer, which creates inflation, which ultimately would then create a situation where the Federal Reserve is getting nervous and starting maybe to raise rates, which the market wouldn't like. We have deportations going on also, which have the potential, if you have enough of them, to create increased costs. Construction and agriculture, one area where a lot of those people work, and so how does that affect things? So far, we've seen a little. We've seen price of eggs go up, but there's other reasons for what's happening with eggs as far as that goes. So it's an interesting time frame. We have great earnings coming out. Google's going to be announcing their earnings. Had a nice run up today in advance of that. We've had some really good revenue beats by some of the companies that have come out, and so the economy is still growing well. The job market was interesting today. It actually came out with fewer open jobs. Matter of fact, fewest since last September. Still a lot of jobs, 7.8 million open jobs. The market seemed to respond positively to that. It's a little hard to tell because there's a lot of things going on today as to what was really triggering things. But fewer open jobs is bad in a certain sense, but in an inflationary environment or potentially inflationary environment, it creates more a situation where it's more balanced in terms of what the employer versus the employee is looking at. When there's lots of open jobs, you can get a situation where employers are paying more and more and more for those labor issues that they need, and of course that can get passed on to the cost of the product too. So this is starting to fall back more into a long-term average, which I think is around 7.8 million, 7.5 million, something like that, open jobs. So unwinding the pandemic pieces. So I didn't see that as a bad thing. And it's certainly not an inflationary thing, which again, if you look really closely at what's going on with the market, it's not about the tariffs really. Overall, it's not about all these different policies. It has been about inflation. The market was hit an all-time high, and then in December we got a really big jobs report that came out with a lot more jobs created than expected. The market's been kind of struggling. The Federal Reserve came out with some negative comments in December, just about how they were going to basically not raise rates, lower rates as much as everybody thought. And then the CPI number came out, right? And we ended up with a nice run, got to a new all-time high. And so if you really look at most of what's being played out here, it has to do with inflation. And that, obviously the news cycle is going to be very heavy around the tariffs because that's the big news. And there was some motion from the market as far as that goes. But I still, even the tariff issue has to do with inflation, in my opinion, because, if you have tariffs, it has the potential to have higher inflation. So I still think inflation is the king element here that we really got to pay attention to. And so having a slightly lower jobs report is not a bad thing as far as that goes. So anyway, that's what's happening today. Again, not a bad time to be an investor. Things are still hanging in there. We've been going sideways since, essentially the middle of November. And there's nothing wrong with that at this point in time. Let's gather a nice base, especially if we're able to jump up above that. That would be awesome. It becomes a nice support as far as that goes. So anyway, look forward to seeing what's going to happen tomorrow, and we'll talk to you then. Thank you.